Yeah, we talked about selling the double and covering the puts on something recently. I don't remember.
You know what it was? I think it was the QQQ trade. Did we do that last week? And we already got stuffed out of that one. Man, what a whippy market.
It's been exciting.
Hey everybody, it's your boy Chicago Sean McLaughlin. I'm the chief option strategist at All Star Charts, and with me, as per usual lately, Steve Strazza, our head technical analyst. Hey Steve.
What's going on?
You know, I feel funny calling you Steve because just a moment ago you were saying, ever since Tom Bruni left, I'm the only person called by a last name around here.
Yeah, I get this special treatment. I go by Strazza, I guess. That's fine.
So you know what? You're special to me, so I'm going to call you Steve. How's that?
I appreciate that. That's what I always chalked it up to too. So.
Well, hey, thanks for once again pinch hitting for JC. Usually JC joins me on these calls, but you know what? You're great company, and you know what? You also had a big hand in helping me put this trade together. So it kind of makes sense that you're here today. So let's get right to it, man. The trade that we talked about this morning in our morning meeting is NUE. Let's pull the chart up here. This is a chart that we've been keeping an eye on, a stock we've been keeping an eye on. It broke out recently, and now it's coming back and retesting some significant levels. Strazza, why don't you tell me about it?
I mean, listen, this chart looks like a lot of charts right now, and this is what the best stocks look like these days. This is what your leaders look like. So we went sideways since about last summer. Different stocks peaked at different times last year, anywhere from February through, like in this case, August. And then you saw like a prolonged basing period. So we just finally resolved higher from this base, took out those August highs around 127, made a nice little, quick move higher. And now we're just pulling back. This is standard stuff. We're pulling back and retesting that breakout level. And if it holds, you got to think that we're going to go on and make a nice leg higher from here.
Now, in case it's not immediately obvious to some people, NUE is works in the energy space, right? Are they an oil servicer? What exactly do they do? Do you know?
No, they're actually steel. So it's the commodity theme, but yeah, NUE is a big steel name.
Look at that. So even I didn't know. All right. So, hey, this is a sector that's had some strength, especially as of late. But one thing that we wanted to point out, and a big reason why we're doing the trade that we are doing here in NUE is that, as is the case all across the marketplace right now, it doesn't matter what sector, whether it's the stocks that are moving up or the stocks that are moving down, almost across the board, we're seeing high options implied volatilities being priced into all options. It's a function of the market environment we're in, the geopolitical environment we're in. There's a whole laundry list of things, right? COVID, whatever. But the market participants are worried, and that's reflected in options prices. And we've seen VIX holding steadily above 30 for the last, 6 weeks now. And that's just had us kind of defaulting, or at least our first initial impulse is we want to be net sellers of options premium in an environment like this. It's not going to work every time, and we've seen examples of that just this week. But more often than not, when implied volatilities are high, we want to be net sellers of options. So with that backdrop, we were thinking, okay, well, where can we leverage options premiums to help us out? And I think at first we were kind of just kicking around some ideas of some delta neutral trades, which is kind of my default in environments like this. But I don't remember if it was you or if it was JC who brought up, well, what about NUE? Like that thing's breaking out. I mean, we just got to pull back and it's looking good. And then we said, well, hey, with the premiums the way they are, we could do we could sell some puts and use those proceeds to finance a call purchase and
right.
Use those puts to leverage into a bullish bet, right? That's kind of how we arrived at where we are now.
And a lot of charts in the metals and mining space look like this right now. But we went with NUE, right? Because they're not all very optionable. These are not the most liquid stocks. A lot of them are mid caps. I think we looked at Reliance Steel, and quite liquid.
We looked at Reliance, and I loved the chart, but then we dug into the options chain. We're just like, ugh.
Right. So sometimes, like you pick the theme, you pick the trade. We were looking for steel stocks, some sort of metals and mining theme, and then you have to find the right vehicle. In this case, because we're trying to express our thesis through the options market, we have fewer options.
Right.
No
Now,
pun intended.
the other thing that we discussed with this trade before we settled on doing a risk reversal was I was asking you guys because I rely on you for this kind of information, the analyst team at All Star Charts, and that is if we're bullish on Nucor, like how bullish are we? Are we thinking that this stock is going to go and retest those highs in March, around 140 and maybe make a run to 150, which is one of those round numbers that people like? Or if we break this 140 area, are we going to shoot higher up to like 175, 180? And I asked that question because it would shape the type of trade I wanted to put on. My first thought was, I said to you guys, well, look, if you guys think that this thing is just going to make a run to the recent high and overshoot a little bit to 150, then the move here is probably a bull call spread. We would buy a slightly out of the money call and then sell a further out of the money call to reduce that cost because there's a lot of premium at those out of the money calls right now. So use that to our advantage to lower our risk. But we put our heads together and you guys said, no, Fibonacci extension, blah, blah, blah. You guys had reasons. Get into your reasons why you think this is going higher.
And this is something we talk about a lot. These kinds of stocks, when they move, they move. So 170, I think, is where we settled on. That's where the fib is. It's also, that's where the measured move is, right? So just back of the napkin real quick. If you look at this range that we're, trying to trade a breakout in, looks like from about 130 to 90. So say $40, tack $40 onto 130, you're at 170. So you get that little confluence, right? Because there's also the Fibonacci extension there, telling you that that's probably the next level of interest. And also zoom out, go back to the 2020 lows, the COVID lows in Nucor. We were at about $30. We went to 120, took a little bit over a year for the stock to go 4X. We're looking for what? A move of 40 points, more like 33% maybe, not 4X. And we have until, when did you go out till? October?
October, yeah.
So totally, it's doable.
Okay. So just let me skip to this next chart real quick. This is I just want to have a visual for people. This is the implied volatility chart for Nucor options. And as you can see, this white arrow is sloping up. We are at the highest levels of options premium priced into Nucor options, at least over the last 6 months. I think this is is true for the last year. So that's a big reason why we want to be selling premium here. Now, bringing it back to the chart real quick, when I was selecting the strikes that I wanted to sell for selling the put, again, we're going to do a risk reversal here. So we decided because we're bullish and we think the stock can go to 170, let's try to put on a trade that's really going to maximize the potential of our profit if this thing runs. So let's do a risk reversal. Let's sell puts to pay for some calls, right? So I looked at this chart and I said, okay, well, we got some support right here, right around 112 is kind of the low of that move back in the early March, late February. And there was a lot of premium being offered at the 110 strike in October. So this was a strike I selected, and that afforded me the ability to buy the 155 calls up here. I don't have a line to show you, but the 155 call strikes. But I liked this 110 for a couple of reasons. Number one, it corresponds pretty well to that kind of little pullback we had in February. It's below the reaction that we had at the end of February, early March. And more importantly, it's below a rising 50-day moving average. 50-day moving average is something that I pay attention to. I know you guys don't pay attention to it as much, Strazza, but for me, it's just like a nice little, it's not the end all be all for me, but I like to see stocks if I'm in a bullish trade. I like to keep an eye on the 50-day moving average, if for no other reason as a logical place to manage risk.
We have nothing against moving averages. They're probably just overused, if anything.
Hey, and I don't disagree. It's the lazy man's technical indicator, and I'm nothing if not lazy sometimes. But the fact that we've got some obvious levels of support between 110 and 115, and we've got a simple moving average, 50-day moving average at, you can see the number here, it's at north of 115 now and rising. That 115 is for me where we're going to manage risk. Okay. So you and I talked during the meeting. We said, look, if this trade's not going to work, we're probably going to find out pretty quickly. Right? It's not gonna take its time and wait, till the summer to tell us that we're wrong. We're probably gonna find out pretty quickly. So for me, I'm going to use 115 as the level to manage risk. Even though our puts won't be in the money at that level, that's still telling me, hey, this isn't working. We're getting out. So that is where I will look to exit this trade. This is where I will look to completely exit the trade. So that means cover the short puts, sell the long calls for whatever I can get, and just completely get out of the trade. By the way, I should probably put this up here, just a visual for people who aren't quite familiar with how a bullish risk reversal is constructed. But you can see here, here's where NUE is trading right around 130 right now. So you can see where we sold the 110 puts, bought the 155 calls. In this case, I did 2 lots. Ignore these prices right here. That when I put this chart together, this was these aren't the prices right now. But when I put this trade on, I was able to get a 10-cent credit. So I was able to sell my puts for 10 cents more than I bought the calls. All right, that yielded me a 10-cent credit. And now, here's the thing about what we do if this trade starts working out. Okay, we already covered the risk management. If it trades below 115, that's our signal to get out. Now, if NUE starts going our way, which we think it will, but we don't have a crystal ball, but if it does, what I will be looking for is I'll be looking for a rise in the value of my calls. And while my calls are increasing in value, that obviously means the puts will be decreasing in value. When I get to a point where these calls are worth or are trading at twice the value of my short puts, so let's just make up numbers here. Let's say these calls are trading at, let's keep it easy. Say they're trading at 10 bucks, okay? And now all of a sudden these puts that I sold at 10 are now selling at $5, right? Then what I will do is I will sell, in this case, I got 2 lots, right? So I would sell 1 call for $10, and then I would turn around and cover these 2 puts at $5 each, which is a $10 debit. All in, it's a net wash. It didn't cost me any money, but I no longer have any short puts, therefore no risk on the downside, and I've got a free call. I got 1 call remaining for an upside run.
That's that free ride risk management right there.
You know what, Strazza, did we do a similar trade last week? I feel like I'm repeating myself here.
Yeah, we talked about selling the double and covering the puts on something recently. I don't remember.
You know what it was? I think it was the QQQ trade. Didn't we do that last week? And we already got stopped out of that one. Man, what a whippy market.
It's been exciting. Like you said,
it's been exciting.
Volatile time.
All right, so that's our trade of the week. NUE, we're bullish. We're using the puts, the expensive puts. We're selling those to pay for some upside calls. We're doing it for as a net credit, whatever net credit we can get. And I put this in the blog post if you guys saw it on my Twitter feed. I'm not so concerned about what the net credit is. I don't care if I get 10 cents or 25 cents or $1. That's not what I'm playing for. I just like to know that if NUE decides to just do nothing and go sideways or maybe slowly up and never quite gets to our, strikes or the 155 calls that we're long, if it does nothing, then the worst case scenario is both options expire worthless and I walk away with a small credit that I collected. Right. Look, if someone else puts a trade on and they pay a small debit of 25 cents or 30 cents, that's fine. It's just for me, I don't know. There's something about it. I like to collect the credit on these trades. It works with my mind, and I like to know I'm getting paid even if it doesn't work.
And another thing I like about this trade too is, this is a big breakout. We are expecting another nice run up. If this is a valid breakout, but it could take time. This is a logical level to see some consolidation. So we're giving ourselves room. This is not a trade that we expect to hit and pay us tomorrow or next week, or next month even. It needs some time. So we're going to allow for some backing and filling, which is why I really like that 115 level as a stop.
Yeah, it's funny you say that because we said a similar thing about CSX and look what that did.
EVX, yes. Not all of our trades are going to be like that one though.
CVX, excuse me. You're right. All right, Strazza, that's all we got for you today, guys. Thanks for tuning in. Reach out to us on Twitter. I'm Chicago Sean. He's S Strazza on Twitter, right? Is it S Strazza?
That's it. You got it.
2 S's. 2 S's.
One for Steve.
All right, everybody. We'll catch you next time. Trading well. We'll see you next time.
Later.